Bloomberg Audio Studios. Podcasts, radio, news. Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, tech earnings bonanza, Apple, Amazon, also Reddit and Twilio will break them all down with experts and their C-suite. Plus, NVIDIA CEO Jensen Huang still hopes to sell its Blackwell chips to customers in China. We'll discuss that and a flurry of Korean deals. And we sit down with CoreWeave CEO Michael Intrator to talk AI infrastructure after a failed takeover bid for Core Scientific. But first, we check in on these markets, which are not quite at a record high. But we're back up and to the right when it comes on the day. We're looking at the AI bubble back in focus, but AI boom, really what's driving these stocks higher over the course of the week. We shrug off government shutdown. We're putting to one side geopolitical risks. We're up 2.6% on the Nasdaq 100 for this week alone. Let's move into what's happened on an individual basis. And the key story of the day is Amazon. Look, we are at a new record high. We're up almost 11% for this particular company. And this is as they show that AWS cloud growth is back on top. It's a bitter pill for many to swallow who have lost their roles at this particular company. Remember, we started the week talking about 14,000 jobs to go. Let's dig into all of that at the moment, because I'm pleased to say Brad Erickson is here with us, RBC Capital Markets. He's, of course, a key internet analyst there. And you've still got an outperform rating on the stock. You think the price could go higher from where we are, currently 10.8%. You see it hitting 300. Brad, just talk us through what you liked in the numbers.
Yeah, I think obviously the reacceleration to 20% on AWS in Q3 was like the headline critical metric they had to do. They did it. And so that really got the stock going. And then I think as you think about, going forward, they're getting this capacity deployed faster than we would have thought maybe a quarter ago. And they gave some nice detail around some of the power, the gigawatts that they've been able to deploy, and some forward commentary there. And it just comes down to kind of simple math. They're not saying they're going to accelerate necessarily on AWS, but if you do the math, it implies that they probably will, and that means there's probably a lot of upside to street numbers, and so that was the point we were making in our note. I
mean, 3.8 gigawatts is massive when you think about each gigawatt, potentially up to 1 million homes. That's how much they put on in the last 12 months. What are you making of the vertical integration here as well? The fact that they're saying that their Trainium chips are already a multi-billion-dollar company, how much does that build to future revenues?
Yeah, Trainium, to go with your second part first, Trainium 2 is largely being used for Anthropic, which is kind of the major enterprise player in the generative AI space. They're going to continue to grow a lot. They're going to double the number of chips at the Rainier site by the end of the year. So that is going to continue to scale up and drive a ton of revenue growth, and it is material to next year. And this is a $130 billion business, so it gives you a sense. In terms of just vertically integrating, it's massively important, right? The power grid is not set up for these data centers, and they have massive needs, massive cooling needs, massive water needs, and so it has and will always likely continue to make sense for these guys to make sure they can do that on their own, or at least become less tied to third parties. So I think it's the right thing to do.
Andy Jassy's time and time again been like supply is the issue here, not demand, Brad. What's interesting is that generative AI gets rippled through the entire business. We're looking at Rufus, of course, which is helping us decide what we're going to be buying on Amazon if we needed any more help on that. That's saying they could add another $10 billion. It's interesting to then dovetail that with what came at the beginning of the week. Look, corporate jobs are going at Amazon, and in many ways, Andy Jassy steered us to that 4 months ago. Is that inevitable when they're looking to bring generative AI as a way to catalyze the business?
Yeah, I mean, kind of two parts of that, right? Rufus is really intended to sort of, add we'll call it a tailwind to your shopping experience and your conversion. So literally get you to buy more stuff. So that's that part of it. The headcount thing is tricky because you're right. Like initially, you kind of follow the fact pattern, and then what we know of some other companies and the efficiencies they're getting. Clearly, generative AI is very likely that it is contributing to job losses right now, and some companies are overtly saying it. Last night, Andy Jassy, the CEO, said that largely it was kind of a function of overhiring middle management, trying to sort of flatten the organization a little bit more, so not related to generative AI. But I think by all intent and purposes, you have to think that trend is going to continue. And yeah, it's a little concerning from a deflationary standpoint, I would say. But, that's what we know so far.
Brad Erickson of RBC Capital Markets, really appreciate your analysis this morning. Thank you very much indeed. Happy Halloween. Meanwhile, let's talk about Apple, which is looking a little uglier than it did earlier in terms of stock price. But earnings came out yesterday, and the iPhone maker said that sales rose nearly 8% in its fiscal fourth quarter. It predicted a jump in holiday sales. Shares actually did do very well after market, but they've come back down this morning. Let's discuss the results and what the share reaction is currently doing. Carolina Milanesi, President Principal Analyst over at Creative Strategies. You're really the person we turn to when you think about how they're innovating, where they're pushing forward. Were you surprised by the overall sales growth when many thought that iPhone 17 wasn't going to be the catalyst that we'd hoped for?
I wasn't. And the reason is because, as I talked to you in the past, hardware refresh, when the actual hardware looks different, always drive upgrades. People still want to rely on the device that is in their pocket 24/7, but make it look different. And this year we got that with the Air, which is not the main seller for Apple, but it doesn't matter. Is getting people back in the stores to see the rest of the portfolio. It was really interesting yesterday that Cook mentioned the supply issues on the 16 model, not just on the 17. And that is a good reminder that a new model every September brings people back in stores and upgrade to previous models as well. It's not just the latest, it's the portfolio with maybe some price adjustment and some carrier promotions that drive that upgrade.
Fewer upgrades going on in China, though. What did you make of the pullback, the surprising pullback in that particular region?
I think part of it is the economic situation in China. We have seen kind of hot and cold from a consumer perspective. The timing was later in the quarter, so it takes a little bit longer from a supply chain perspective. We also need to remember the supply chain has moved away from China, so there is some adjustment to make as well because of the U.S. and production shifting to India. But the most important thing is what Tim Cook said, which is signals towards the end of the quarter was positive. People were going back into the stores. But the big quarter for China is always Q1. That is Chinese New Year. By then, there's hope that the supply constraint that Apple has had, especially in the higher models, which is usually where China gravitates towards, will be resolved. And that's where the big quarter should come in. And if it doesn't, that's when I'm going to start worrying. But for now, I'm not worried.
And they digest the eSIM situation as well. I spy a Cowboy Carter memorabilia behind you. I love that tour too. Let's just talk about the services side, the music side as part of that. But services really is what drove the strength at the moment. Can that be reliable going forward when we think about the regulatory pressure on the App Store, for example?
I think it can, because more and more is really content and is also advertising. We've seen Apple close the deal with F1, so they'll start streaming F1, which is becoming more and more popular in the US and across the globe, with a demographic that Apple is really, really keen in keeping and growing, which is Gen Zers and younger millennials. So I think that is real the opportunity for Apple. Is on the content side, is the engagement side, and that also over time will come into play with Apple Vision Pro.
I mean, very briefly, what about the AI side?
Well, we have been promised an improved Siri coming in 2026. And as we discussed before, Apple has some time to figure this out. I think that most of us have figured out what AI can do for us in a productivity setting, but not yet on a personal way. And I think that's where Siri is going to play the most.
Carolina Milanesi, always great catching up with you, President and Principal Analyst at Creative Strategies. Happy weekend. Meanwhile, coming up, the parade of earnings, it continues. Going to be talking to Twilio's CEO about their results next. This is Bloomberg Tech. Shares of Twilio, as you can see, spiking today, up 17%, let's call it, after the company reported strong third quarter results. Gave a bright outlook as well. Let's discuss it all. Khozema Shipchandler's with us, Twilio CEO. Analysts, investors very excited about the voice AI applications in particular for their customer engagement. Is that what drives us?
Well, we had a great quarter, and I would say across the board, voice AI was certainly a contributor, but every single one of our products contributed this time. I'd say messaging and voice in particular were particularly strong. In addition to that, across channels, across geos, across customer segments, it was just a really good quarter for us. And fortunately, we were able to beat on revenue, profit, cash flow, as well as raise for the year. So we're pretty excited about the results.
You go into the detail of how the 10 largest voice AI startup customers are increasing by 10x. Where particularly are they finding the rewards? Because many have questioned really the sort of pilots, whether they're working or not. Where has yours been working?
I think you've got two ends of the spectrum. So on the one hand, you've got voice AI startups, and these are companies that want to get going super quickly, right? So we're an extremely well-known brand. They come to us first in most cases, and so we're really lucky to be able to count on their business just to get their workloads out in the world. On the other hand, though, you've also got enterprises. Enterprises, they definitely see an opportunity to take out costs, but as well as enhance their revenue experience. And so I think more durably, you're seeing enterprise customers begin to adopt these tools. It's probably happening at a slower rate than it is with the voice AI startups, but all the same, it's really exciting.
Yeah, I just think about some of your key customers, Lyft, Reddit, Dell, Resi, Uber, Shopify, some of the biggest brands out there. KeyBank analysts in particular signaling that this is just a wave that they think is just beginning to build. How much larger do you think this has become? How much am I just going to be talking in a customer relations perspective via voice?
I think it's going to become pretty commonplace. I mean, you're already starting to see it. I'm sure you've experienced it a handful of times in your interactions. I think what's key about being able to deliver a good experience is being able to have contextual data underneath it all. If you have contextual data, which is a big part of our story in communications plus contextual data plus AI, but that data is what really allows the customer's problem to get solved, right? You don't want just cool tech. You want problems to get solved. You want to be able to create richer and richer experiences that actually create customer engagement. And I think that's where the real unlock is. The
real unlock being about AI agents for many. And I know you've actually been making some acquisitions in that space. We think about Stitch, the identity platform within AI agents. Is M&A going to be a real use case here for you to bolt on to get the talent that you need, to get the tech that you need?
I think we have optionality. I mean, we're generating so much cash that we've been buying back a lot of our own stock. We also just dipped our toe, as you pointed out, into M&A. Stitch was a great acquisition from our perspective, a small tech and talent tuck-in, less than $100 million in purchase price. And I think it's exactly the right kind of asset that allows us to accelerate our roadmap. With that one in particular, they're very developer focused, which is very much in our DNA. And they also allow us to faster realize our platform ambitions in terms of delivering purely agent experiences that require identity to be a part of it for us to be able to trust who we're interacting with.
Twilio shares just showing how much people are loving this revenue and the numbers. Gross margin still an area that some called out as being pressured. Quickly, is that something you're focused on?
I mean, of course we're focused on it, right? The commitment that we made last quarter to investors was that we would stabilize gross margins. And I think in Q3, that's exactly what we did. We'll continue to work to stabilize gross margins. I think it kind of overshadows the story in some respects. I mean, the reality is that we maintain an incredible amount of price discipline. A lot of that gross margin pressure, frankly, comes from two areas. One is the success that we're having in our messaging business, which is growing super fast. I don't really think we should have to apologize for that. And frankly, I think that allows us to grow into other customer opportunities over time. And then the other area is just fees that get passed down by carriers. I think that is purely an optical element of the story. It doesn't impact our ability to generate gross profit, and importantly, has not impeded our ability to drive operating leverage and free cash flow.
It's not impeding the stock today either. Khozema Shipchandler, great to have some time with you, Twilio CEO. Now, also delivering a better than expected forecast was Reddit. Social media platform has benefited from data licensing deals, of course, with OpenAI and Google, but it's really about growing advertising business that drives it this time. We spoke with the Reddit COO, Jen Wang.
I think a lot of the things that we're doing are working. You saw our active advertiser count grow 75% year over year in Q3. And I think that's the result of our go-to-market and acquisition investments, as well as making our platform more automated and simple to use, as well as really delivering more performance, particularly at the mid and lower funnel, where a lot of mid-market and SMB businesses like to transact. We also grew 9 out of 15 verticals, over 50% year over year. And I think that shows the diversification of our business, how robust it is across every vertical and every objective. So every advertiser can find success on our platform. So those investments that we've been made are really paying off.
And the investments in translation really paying off when you think about diversification internationally. How is that still working? How much low-hanging fruit is there to grow outside the United States?
Well, I think there's enormous headroom outside of the U.S. Our traffic today is about 55% outside of the U.S. and 45% in the U.S. And the rest of the world has been growing. And every country that is a non-English country is just an opportunity to build another Reddit. And the process of doing that starts with machine translation, using AI to translate universal conversations so that somebody in France or Germany who operates in a non-English language can have access to great content and communities on Reddit. And then the process of building local communities so that if you're in France, you have a local bread community, Germany, your local football communities, so that it feels local, your city communities. All of that is opportunity for us and opportunities to build another Reddit for every language and culture.
It's really interesting that AI is really the tailwind here, whether it's ability to serve your companies, those that are advertising with you, that much more sophisticated applications, the way in which they're able to advertise with you, whether or not it's the AI that's helping you do translation. But also we know that a big part of the business has started to become how you're used by AI LLM producers. How is that a stage of priority? Can you just weigh it up for us, the prioritization of advertising versus the prioritization of making these deals with big LLMs that you already have done with Google and OpenAI?
Yeah, our core business is advertising. It's a business model that has a lot of TAM and is a big addressable market. I think we have a lot of headroom there. Our ad platform is growing. Our marketplace is growing, as I said, 60% plus year over year. And we really like our roadmap there. There are thousands more advertisers that can be on our platform, in addition to more verticals and more geographies to come onto our ad platform. So we see a lot of opportunity there across the funnel, in automation, in ad formats, and even in delivering more performance for our advertisers. So that's our core business, and that's where we're focused.
What about the AI chatbots and them actually helping you in terms of driving traffic? When does that really start to bring to bear?
That's a space that is just under incredible heavy construction because it's also new and it's changing. The UI is changing, the products are changing. How we think about the use of AI even on our platform, on Reddit is changing. So, it's hard to say, I think, but I think I would say the relationships that we have with the LLMs and our partnerships, the relationships are really healthy, and we continue to learn a lot through these partnerships. I think we've certainly learned that our data is highly appreciated. It's highly used and cited. I think we're the topmost source domain in Q3. So I think we're watching that area very, very closely as it evolves.
Jen Wang, Reddit COO there, talking of relationships with LLMs. NVIDIA CEO Jensen Huang says he's still hopeful that the company would be able to supply Blackwell-type chips, at least, to China, quote, someday. This is the company caps off a huge week, hitting a $5 trillion market cap. Bloomberg's Ian King, who covers the semiconductor space, has been on this relentlessly. What a week, Ian. And look, this is pushing back at some of the anxiety that brewed yesterday that China just wasn't on the table when it came to a discussion between Trump and Xi.
Yeah, I mean, there's been so many twists and turns in this one just in the space of this week. Jensen's been obviously making his case in Washington. Now he's making his case in person in Asia where the president is. President Trump mentioned this Blackwell chip, said raised the possibility, raised everybody's hopes, and then kind of took it away a little bit. So we don't really know where we are now other than hoping that, because it's being discussed, that there is more possibility of NVIDIA doing more business in China.
Certainly more business in South Korea. I just want to bring what our own Sherry Ann was able to say and catch up with the CEO, Jensen Huang, while in a news scrum in South Korea. Just take a listen, Ian.
What's the potential of sovereign programs that you mentioned, especially across Asia?
Well, here in Korea has a chance to be one of the world's major AI hubs. And today's announcement, along with President Lee's passion and enthusiasm and drive, and all of my CEO friends here who are dedicated to create this journey for Korea, this is a perfect example of sovereign AI.
CEO friends being Samsung, Hyundai, SK Group. There was a lot going on, but some sovereign AI too for them in Korea.
Yeah, no, he's trying to make Korea into yet another example of this push that he sees of let's deploy AI everywhere, let's get it in government organizations, let's get it in corporate situations. And, Korea obviously has a vibrant tech economy, companies like Samsung. So he's seeing this as another perhaps exemplary kind of position and country for this push that he's making around the world.
260,000 accelerator chips to go to Korea. Bloomberg's Ian King, we thank you. And look, there was more than just chips over in South Korea. Shares of fried chicken stocks have got the NVIDIA effect. Restaurant Kochon F&B briefly surged as much as 20% on Friday, while Korean poultry processor Cherry Bro also soared by the daily limit of 30% trading volume, about 200 times on average. And also makers of chicken frying robots jumped. Why? Because Jensen Huang ate fried chicken in South Korea alongside the Samsung CEO and others. Wow, he manages to drive up share prices across the board. Welcome back to Bloomberg Tech. Boy, have we got a busy markets day for you. So many earnings. Let's digest, because we're currently seeing the Nasdaq once again trading higher up a percentage point. Not yet at a record high, not shaking off yesterday's sell-off, but we're still trading to the upside as Amazon leads the pack. Points perspective, we're up 11%. New record high for Amazon. AWS growth more than 20%. Meanwhile, Apple actually fades into the red. We were trading higher before the bell. We then took off, maybe a bit of profit taking going on as they deliver what was better than expected revenue for their fiscal fourth quarter and point towards at least 10%, 12% sales growth for their all-important holiday quarter. Move on, have a little look at what's happening in the world of Netflix. Another stock split. Yesterday, we were hearing it, of course, coming from ServiceNow. Today, 3.7% higher on Netflix, which is $1,129 per share. They want to rectify that. They're going to do a 10-for-1 forward stock split to reset that share price. But let's return to the world of other areas of AI, and in particular, Core Scientific shareholders, which voted down CoreWeave's takeover bid, blocking the proposed acquisition. But CoreWeave's not slowing down in M&A, announcing yesterday that it will acquire Marimo. It's a maker of AI software, just minutes after the Core Scientific deal was terminated. Here, joining us to discuss, CoreWeave CEO Michael Intrater, a very busy week. And I want to just dwell a little bit on Core Scientific, because you're very important to Core Scientific. You are their only customer. You'd hope to bring them on, keep using their compute. What happens now? How solid is that partnership?
Oh, I think first of all, thank you for having me, and happy Halloween.
Happy Halloween.
The partnership is very, very solid. We continue to be a consumer of the services they provide. We continue to be a consumer for the next 10 or 15 years with a series of extensions of the infrastructure that they provide and that we require in order to deliver our products. So, the relationship is in good shape. The shareholders voted down the acquisition yesterday, and from a strategic perspective, I think everybody on both sides of the fence really felt like it made sense, and it really just came down to price. And for us, We put out a bid. We're, as you said, we're quite acquisitive. We bought Marimo yesterday. We bought Weights and Biases, Monolith, OpenPipe. We've really been buying and building the AI cloud. And there is a price point that made sense for us to move forward with that transaction, and we have a plan, and we are going to be very disciplined around that plan. And at approximately 10%, it made sense, and if it's going to be above that, then we'll continue to use them as a vendor.
Well, Core Scientific now tries to diversify its own customer base other than just you. Does that give you any worry?
No, not at all. Look, our footprint within the Core Scientific ecosystem is about, I think it's about 580 megawatts worth of infrastructure. This quarter, we've signed over 600 megawatts of data center infrastructure outside and exclusively outside of Core Scientific. So, look, they're going to run their business. We hope that they are a strong operator. It's important to us that they are. We are hopeful that they will continue to invest in their business and their ability to execute and deliver infrastructure. And we continue to work with them on a go-forward basis, just as we have for the past 5 years.
Look, they were a Bitcoin miner turned AI supplier. You two were that. Look, there are some others out there as well, TerraWolf and the like. Would you look to acquire any of those?
So I've always talked about acquisitions as strategic and opportunistic. My view is acquisitions like Marimo or Weights and Biases, Monolith, those are strategic acquisitions. They move the company and broaden our software solutions. The acquisition of a infrastructure provider is a opportunistic acquisition. We're currently building data centers within CoreWeave from the ground up to solve this problem of adding additional control over the infrastructure. So, we've got a data center in Pennsylvania in Lancaster that we're building. We have a data center in New Jersey in Kenilworth that we are building. And so, we're always, reviewing the opportunities that exist within those two buckets, the strategic and the opportunistic bucket, and we're open to looking at things that move our company forward. But once again, it's got to be at the right price.
Right price. Do you have to raise more capital to keep on building out your data center offering?
CoreWeave has been at the tip of the spear of raising capital for the AI build out, right? Like we were the first ones to do the GPU-based backed lending products, and our growth continues to rage along. I mean, it's just amazing how fast we're growing, how much interest there is for continued build out of our product, of our software solution, and delivery to a broader and broader base of clients. And so, we'll continue to raise capital to support that activity just as we have. And
the reward is big enough. The Gil Lauriers of this world at DAO Davison still saying the capital structure doesn't make him happy because the amount of 5% you get back on a 9% investment is, are you managing to rectify that?
First of all, I just fundamentally don't agree with his analysis. So we can start there. But more importantly, we have built a business that generates great returns and provides the infrastructure that the world needs to build and deliver artificial intelligence. We think we have a great business plan. We have a very large and diversified shareholder base that agrees with us, and we're going to continue to expand on the business that we've built.
And look, you're diversifying the customer base. I think Meta, it's interesting how Meta's getting a bit beaten up for the amount that they're plowing into AI data centers, whereas we're congratulating the likes of Amazon and indeed Google. What do you make of these anxieties around AI infrastructure build out?
It's interesting. When a big investor gets beat up for investing large sums of money, into the infrastructure that we're going to have to provide, feels kind of like that's pretty bullish for us. We're going to have to provide that infrastructure. Look, Meta has a strategy. They have been incredibly disciplined around executing on that strategy. They are going to build their AI solution, and we are really excited about adding them to our long list of very large, very active customers that are really going to define what compute looks like and what the world looks like for the next 50 years.
Well, keep coming back to give us that vision. Michael Intrator, it's been a long week for him. We wish him a wonderful weekend. CoreWeave, CEO there. Meanwhile, design startup Canva, it's rolling out new AI tools too, incorporating recent acquisitions into its main product suite, attempting to lure users away from rival Adobe. Our own Ed Ludlow, who's off today, he sat down with Cameron Adams, Canva co-founder and chief product officer, about the launch.
It's definitely an advantage, and we think deeply about the data that we use and how we go about training our models. We're all about transparency. So every interaction you have with AI can be controlled in Canva. We give you all the switches and levers you need to say this data can be used, this data can't be used. And in terms of copyright, we actually offer indemnity for that for our enterprise users. So as they're using Canva, they get the benefit of what we call Canva Shield, which means that any content that they generate through any of our AI systems, we indemnify them for any copyright that might arise from that. Although we've never had any problems, and we don't foresee any.
I think it's really important to sort of acknowledge there is a big body of the technology industry that are like more relaxed now about the copyright issue. Copyright concerns are kind of fading. Brings us back to the idea that in the future, there are alternative models out there, third-party models. Is Canva flexible to kind of update its stack on the run? You know, if a model becomes available that can improve the operating system, you would be able and nimble to integrate it into what you're doing.
Yeah, entirely. We've always taken a three-pronged approach. So we love partnering with the world's best. We're some of the first people that OpenAI, Anthropic, Google call on when they want to innovate with the models that they're producing and kind of collaborate with us to create an amazing experience. On top of that, we're also building amazing research and development in-house. The Canva design model is a great example of that, and we're constantly developing those models inside Canva. I think we now have over 100 different models inside Canva that are deployed through the product. And then the third pillar is creating a great ecosystem. We know a tremendous number of developers also want to build on Canva. They want to bring their technology into Canva because we now have 260 million people that use the product.
Canva co-founder Cameron Adams there. Now coming up, we'll discuss the future of TikTok in the United States after this week's historic meeting between President Trump and Xi Jinping, where it wasn't really brought up. This is Bloomberg Tech. Many were anxiously waiting for some updates on TikTok's future in the US. That was following this week's meeting between Donald Trump and Xi Jinping. But nothing really came out of it. And while China's Commerce Ministry did say on Thursday that it's committed to properly resolving issues related to TikTok, it didn't mention specifics. Bloomberg's social media reporter, Alexandra Levine, joins us now to make sense of it. You've got a great newsletter out today, Tech in Depth, and, well, we're left hanging.
We've been waiting for any clear sign, basically since the executive order was signed back in September that said that the deal was going to be advancing, any clear sign that China is actually on board. And of course, everybody in the Trump White House has been very reassuring and saying that China is fully on board with this. But reading between the lines, we really haven't heard a lot from China. And even after this meeting that the two leaders had yesterday, we were waiting for any sort of clear signaling that things are really progressing. And I think that most people watching were more interested in what wasn't said than what actually was.
There is still much cynicism, shall I say, over any future relationship of just a spun out TikTok in the US from President Trump's own party.
Absolutely. I mean, I think that you already have members of his own party who have pointed out all sorts of issues with the deal that has been proposed. The law that was passed last year under then President Joe Biden, said that there really has to be no operational relationship between TikTok and its parent company ByteDance under whatever new setup we may have. And there's several different aspects of the deal that show that ByteDance is going to potentially have a board seat, that ByteDance will, still have oversight over key parts of the business and its own executives leading key parts of TikTok's business. So it really seems, the more that you drill down into the deal that is on the table, that there are a lot of points that make it seem like there is in fact going to be an operational relationship, which would probably not pass legal muster.
Bloomberg's Alex Levine, relentlessly on this story. We thank you, and I'm sure we'll come back on it. Meanwhile, let's keep the discussion going on US-China relations and its impact on the tech sector at large. Amy Webb's with us. She's a founder and CEO of Future Today Strategy Group and a professor at NYU Stern School of Business. You and your colleagues, you develop predictive scenarios, executable strategies for organizations worldwide with research specializations. You particularly look at AI, at biotech. And Amy, what did you make of Trump and Xi's relations this week? Because much was left unsaid rather than just said.
That's right. I mean, I think the result here was certainly a de-escalation rather than a full reset, but it definitely did not end the AI Cold War or some of the consternations around other frontier technologies that are often in the mix when we talk about these two countries. So I would argue that this sort of moves the battlefield away from tariffs, but over to transistors for the time being.
Okay, let's go to transistors, because much was hyped that maybe Blackwell architecture chips from NVIDIA would be discussed between the two leaders, and it wasn't. We understand today that Jensen Huang is still optimistic that he'll get some sort of access to China. What do you think about the realities of that?
Well, I think at the moment, what we have is predictability, where all we had before was growing uncertainty. So this could ease some short-term supply chain fears. So that definitely helps companies like NVIDIA and AMD and other U.S. Semiconductor tool makers who had been frozen out of Chinese markets. But I also don't think that NVIDIA is going to be allowed to sell just whatever it wants. That said, given NVIDIA's new $5 trillion valuation, which also happened this week, this is really, really important, not just for investors, but for our entire economy. I think something like 40,000 companies use NVIDIA GPUs and for AI and for accelerated computing. And their biggest customers are the big tech companies, Microsoft, AWS, Google, Oracle. And by market cap, these are some of America's biggest companies. So I don't think that the doors are open and there's going to be a fire sale overnight, but I do think there's reason to be more optimistic than maybe before.
But Amy, why does it matter to the US economy and some of the big players in NVIDIA? Because NVIDIA hit that $5 trillion market capitalization while saying they had zero sales into China. The idea being that they can actually go it alone.
Well, I think that's true today. The issue is what's coming in the future. So the CCP, every couple of years, every 5 years, they have very secretive meetings held in Beijing on their 5-year plans. And this happens with regularity. China's top, so this meeting just happened, and China's top priority is building what it's calling a modern industrial system, which is really code for making old industries smart and new industries unstoppable. So what this means is heavily investing in frontier sectors like aerospace, biomanufacturing, quantum, advanced materials, and improving supply chains. All of this requires those advanced chips. So effectively what this means is today, NVIDIA is probably fine. Going into the future, it gives Chinese AI champions and local chip makers much more time to domesticate their operations, their supply chains, and push their own homegrown chips, which is potentially great for China, but bad for the West.
So kind of more deep-seek moments, but from the actual underlying technology, not just the LLMs that is built upon it, Amy. I'm interested in what really the chokehold that China had found it had was rare earths. And there was some discussion around there, but how quickly is the US and Western nations able to become self-dependent in their own way on that front?
Look, I would love to offer some better news here, but the reality is that the materials for semiconductors come from, basically one place on the planet. While in the future, I think we'll be able to engineer our ways around those materials and those magnets. But at the moment, we're kind of hamstrung. And as much as the Trump administration has promised to make significant investments into advanced manufacturing here in the United States, the reality is nobody's going to be able to catch up when it comes to advanced manufacturing at scale. Certainly not over the next 4 years, not even here in the United States. So it doesn't mean that we're all at a huge competitive disadvantage. It does mean that even if the domestic market isn't hot within China, the CCP is banking on industrial modernization as the backbone of its national competitiveness, and it has government sponsorship and support and tremendous capital that it can put toward that effort.
Amy Webb, really interesting. Thank you for your analysis today, Future Today's Strategy Group. We appreciate it. Venture capital has poured nearly $200 billion into AI startups in just 2025 alone, as of early October. Our colleagues who cover the sector have been really drilling down to find the most influential and best funded ones that you should know about. One of those reporters, of course, is our own Rachel Metz, and she joins us now. And you seek out 24 real winners here. And what's so interesting is there's real international flavor as well. Just talk to us about how you broke it down. You initially perhaps find the LLM makers that we should really be thinking about other than OpenAI.
Yeah, I mean, we've done this list for the past several years, and this year we really wanted to try to focus on having a big selection of companies in different categories, because as the AI ecosystem has evolved, we're seeing people moving into more and more categories of it. We have companies that are building sort of the infrastructure for it. You have only a handful of companies that are actually building models. You have companies that are concentrating on office-related stuff, companies concentrating on content generation. So it was starting to feel like we had enough for kind of like a yearbook superlative was kind of what I was thinking of it in my mind when we were working on this of these different categories.
And so we're looking now at the model makers to watch. DeepSeek in China, obviously, but Humane in Saudi Arabia, an interesting one and one that's been a big infrastructure player. Mistral in France, we had the CEO Arthur on just last week. But move to the vibe coding, because I think this is where people are getting really excited about the application of AI, particularly in the world of engineering. We all know about Cursor, but take us to Sweden, take us to other players in the US.
I would love to go to Sweden. So Lovable in Sweden has grown tremendously quickly, similar to how Cursor has grown tremendously quickly in the US. Lovable and also Replit, those two are a little more focused on people that don't have coding experience. And Lovable in particular is focused on helping you build, say, a website, even if you don't know anything about coding. Cursor is more meant for a professional or someone who at least has a decent to pretty deep knowledge of coding. But these other companies, Replit and Lovable, they really are trying to democratize the idea of building something on the internet or building an app, building software.
Democratization is the watchword when it comes to making movies, when it comes to making music, and not without its tensions with IP. But briefly, thinking of Suno, Runway here in New York, but also Black Forest Labs over in Germany. I love that name.
Yeah, so Black Forest Labs, they are a really interesting group of people who were behind the initial technology that was used to launch the company Stability AI, so Stable Diffusion. They worked on that, and they are now building their own separate company using technology that they've also built. And it's able to create quite realistic looking images, and a lot of companies are striking deals with them, such as Meta.
Rachel Metz, it's a great read. Go and have a wonderful Halloween with the family. We so appreciate you today. Now that does it for this edition of Bloomberg Tech. Another must-watch story, our original investigation, Can't Look Away, the case against social media. It's now available on Bloomberg platforms. You must go watch it. This is Bloomberg.